Shells in Ukraine have ricocheted around the world, with broad consequences for markets.
Users can be confident of an orderly market and a reliable forum for trade.
Last week, a record spike in the price of nickel on the London Metal Exchange was anything but orderly.
What has happened is basically a physical supply risk, basically with Russia being sidelined from the market, translating through to a financial market event. And in particular, what we're talking about is a short squeeze.
After picking up pace in the previous trading week, the price of nickel surged by 90% last Monday, briefly hitting above $55,000. On Tuesday, things got even crazier. The nickel price skyrocketed, briefly going above $100,000, paring its gains to $80,000 before the LME intervened, suspended trading and cancelled the day's transactions. The price now sits around $48,000. Analysts say it's unclear when the London Metal Exchange will lift the trading halt.
This has only been done once before in the 1980s with tin. So it is a really unprecedented. I think what the LME are basically trying to do is create a circuit breaker so that this can never happen again.
Today, tomorrow.
The high drama on the LME has been blamed on the world's biggest nickel producer, Tsingshan Holding Group, controlled by a billionaire known as Big Shot.
He has in the past made big bets on the markets, and this is one which he's made a very large bet and it's come unstuck.
They'd sold nickel forward on the markets, betting on the price going down, not up. Facing losses of up to $8 billion, there is speculation Tsingshan could be bailed out by the Chinese Communist Party.
You're too big to fail almost sometimes, and I think this is what we're seeing at the moment. The market closed down rather than let him fail and cause the market to implode.
Tsingshan Iron and Steel.
There's a lot of investors obviously quite panicked and concerned by what has occurred here.
Nickel is just the latest commodity price to explode, and the volatility is set to continue. It's already hitting consumers through fuel prices in particular. In Australia, annual inflation is at 3.5%. In the US, it's at a 40-year high, up a staggering 7.9%. Nickel is used to make stainless steel and electric car batteries. Higher costs will eventually be passed on to consumers, but analysts expect the commodity's price to cool.
A long-run price for this commodity is somewhere between $15,000 to $20,000. Now, how exactly we get there, that is going to be the key question.
Western Areas is ramping up and reopening an old nickel mine site. It's a trend that's being seen around the country.
I think that we've got a pretty strong growth profile going forward on the back of electric vehicle demand.
The company's CEO
When are you going to start drilling?
believes high demand for the metal is here to stay.
Do we like high prices? Absolutely. Do we like them volatile? Probably not as volatile as we saw.
Riding a commodity boom in very uncertain times.